Okay, people, apologies for the late resumption. Very, very sorry for that. Today is another beautiful day. Greetings to you. We are Vestrado. As always, I'm Atomashi Dania, Vestrado's global market analyst. And today we are looking at how to analyze a chart. How to analyze a chart. So again, we are Vestrado. You know us. We are domiciled with offices and representations all over the world. Indonesia, Singapore, Malaysia, Dubai, China, Nigeria, South Africa, Kenya, and so on and so forth. We got offices all over the world. And we have very tight spread going from 0.4 to 0.6 or 0.8, depending on which account type you are trading. Welcome, ladies and gentlemen. Today is a very wonderful topic, a topic that plagues many beginner and intermediate traders, and even many veteran traders who perhaps don't know how to analyze or apply the charts, okay, in trading the markets. And I hope that after today's training, you can at least, you would at least get some clarification or better breakdown as to what this should be, or this is, or how it should be done. Again, no man is an island. This is my opinion, my view. What has helped me and has helped many other traders. There are many other ways other people analyze the markets and approach the markets. Okay. So remember that no man is an island. There are thousands of strategies, but chart analysis often comes with a basic fundamental, some basic fundamental steps, right, that everyone eventually goes through. So that's that. In going forward, again, I welcome you to today. This is a live recording. You can always come back, watch, and hopefully repeat in order to help your trading journey. Okay, welcome aboard. Now, what are we going to be doing today? We're going to be looking at how to analyze the chart, yes, but of course, before then, we're going to look at Telegram tips and advised entry levels. Okay, how they fared today. We're also going to be looking at some trade opportunities. If you stick with us at the end of this training session, we're definitely going to be looking at trade opportunities, what to trade going into Friday and perhaps even Monday. And some might be wondering why today, Thursday, tomorrow is Salah. Back at the Salah to my Muslim brothers and sisters. Happy Eid al-Kabir. Happy Eid to you. I wish you a wonderful Eid celebration. Great one ahead for us tomorrow. Okay, as we go into tomorrow, may the Almighty Allah subhanahu wa ta'ala grant us the joy and blessings of the season. Cheers. All right, now let's go into action. Before then, I'd like to share with you that our social media handles, of course, on Telegram is Vestrado Global. You can see that right there at Vestrado Global. You can enter that on Telegram, type it in, and hopefully you can join our Telegram channel. You can't just by clicking the join button on Telegram. Look for us by typing those parameters at Vestrado Global as they appear on your screen in Telegram in search of us. And you can key into our daily outlook, our advice, and whatever signals we're going to be giving, or perhaps whatever advice we're going to be giving in the markets, pertaining to the markets, okay, every day. On a daily outlook, we give weekly outlook, we give general outlook across board. You want to be on that channel. Now, of course, just like last time, you're free to ask any question you like, wherever you're joining us from, whichever question you have pertaining to today's topic, or perhaps maybe some other topic that plagues you that you think we might be able to help you with. I'm here for you. Ask your questions. Take a pause. We're going to take a pause. Any question at all pertaining to perhaps how to register an account, perhaps to some topic, some other topic in trading, okay? Some other topics pertaining to the financial markets. I'm here for you. I will try to answer as much as possible. So let's wait. Perhaps maybe one of you two people want to join us here. 1 minute pause before we get into the real action. 1 minute pause before we get into the real action. Perhaps some persons want to join us. Call your friends, share this live to traders and non-traders alike so they could know and key into the financial markets, how to take advantage of today's new world. Trading on the go, financial freedom. You got an employer you don't like, you want to quit your job, you're looking for how to raise savings, you're retiring soon. This is the channel to be. Tell your friends, tell your family, tell your loved ones. Okay, so let's go to Telegram and see what we had this week. Okay. Um, the outlook on Telegram has been quite adventurous. Let's start from Monday. What did we have on Monday? Look, on Monday, we gave, after talking about the major summary of the markets and how it could impact the markets or what happened, we gave weekly outlook on the NZD USD, on the AUD USD, the USD CHF, okay? And then we sent you also weekly outlook where we directed you to the YouTube where you could watch the weekly outlook on Bitcoin, weekly outlook on Ethereum. So many Ethereum traders these days. Okay, that guy, that crypto has been giving us some very, very good money. Okay. You want to watch our weekly outlook and predictions. Really gonna help you. Then we'll get brief analysis on the USD CHF, how it's within the range. Okay, on Tuesday, taking advantage of the range. We talked about the GBP USD intraday scalping opportunity like a signal, the AUD USD intraday scalping opportunity like a signal, and we have double take profit alerts on the NZD USD, same Tuesday, okay? And on Wednesday, we had take profit alert from the intraday scalping opportunity given the previous day, which captured actually on Tuesday. GBP USD intraday scalping opportunity also captured on Tuesday. And then we have the USD JPY daily outlook on Wednesday. GBP JPY daily outlook. You can see how we're giving every day. And then Bitcoin daily outlook. We also give gold intraday scalping opportunity, but unfortunately, gold did not break past our support point. Hence, there was no need to take advantage of that. We couldn't, of course, we couldn't sell that. What a pity. But we had triple take profits on GBP JPY. GBP JPY right there, triple take profits. We had, we talked about the Canada's new overnight rates, all right, how they left it steady rather. We talked about the US ADP non-farm employment change, how it impacted the market. And we talked about the USD JPY triple take profit alerts. Okay, we gave that alert. Three take profits on USD JPY. All right, that was yesterday. Bitcoin, two take profits from the outlook we gave. Ethereum, two take profits from the outlook we gave yesterday, the previous day, rather. And then USD CHF daily outlook given today. You see, we've been busy on Telegram. You want to come join us. And finally, we interpreted the EU main refinancing rate and how it impacted the euro. Euro went strongly bullish, especially from the ECB press conference. We prepared you for that. We've been preparing you for that. Let's start at the start of the week. If you had been on that channel, definitely you would have been prepared for whatever impact that happened today on the euro USD or pairs tied to the euro. And we talked about the new travel ban Trump proclaimed and dished out to 12 countries. How it really doesn't affect the market so far. Okay. So we've been busy on Telegram. It's you better come join us so you can key into the action. All right. All right. So that's that for that. Now let's go into the action proper. Let's go into the action proper. Great. How do we analyze a chart? Oh, they say you can have knowledge, right? And not know how to apply. It's one thing to know how to trade, or rather have the knowledge. You could attend seminars or conferences. You could read books, watch YouTube videos, watch Facebook videos, whatever it is. The key question is, how do you apply it in the market? First off, before you even start to place positions, you need to get your analysis correct. Okay? You need to be spot on with your analysis so as to take advantage of opportunities in the market. So you can have the knowledge. The question is, can you apply it in analysis? Can you apply it in placing positions? That's the big question. And that's what many traders, beginner, intermediate, veteran traders alike, struggle with. Ladies and gentlemen, I hope today, after today, you would find it easier to key into the market and analyze the market based on the outlook, or rather the advice we're going to be giving. Again, ask your questions. We're here for you. Don't be shy. Okay. All right. So let's start. Now, when we start out like this, I like to start with some key facts, some main facts, and I like to put those main facts out there for us. First off, let's get our title correct. How to analyze a chart. Let's get the title correctly, and then put it out there. Next, let's put our main facts on the side to guide us in the course of our learning today. Let's put our main facts on the side. So first, what are the steps of analysis? Okay, I already gave you the starting point to this lecture on Telegram. You can go there and find how do you analyze the chart, educational tip, hashtag trading tips. Okay, hashtag trading tips. Let me just show you. Hashtag right there. You can see that on Telegram. Okay, how do you analyze the chart? I sent to you the basic fundamental steps in that post. Okay, so we're going to use that to guide our learning today. What are the fundamental steps of analysis, okay, pertaining to the charts? All right, let's get that out of the window. Get it out of there and bring that in here. There you go. So we said the fundamental steps of chart analysis include: one, choosing the right chart type. What does this mean? What does this mean when we say choosing the right chart type? It really doesn't mean much. Okay. So let's start with that. Let's start with that. We want to choose the right chart type. What chart types do we have in the market? If you're a veteran trader, of course, this shouldn't be a problem for you. Number one, of course, there's the line chart, there's the bar chart, and there's the candlesticks chart. Okay, we have the candlesticks chart. We have the bar chart, and we have the line chart. Of course, amongst these three, each one has got its uses. For example, there are some patterns like the railway track. Okay, there are some railway track strategies, abrupt changes in the market that some traders apply. But railway tracks are quite visible, better visible when using bar charts. Okay, there are some patterns, okay, that are better visible when applying the bar charts. And there are some patterns visible when using the line chart. For example, you're trying to plot your Elliott wave. Elliott wave analysis, one. Secondly, you're trying to assess proper close levels, real swing lows and swing highs to connect trend lines, to draw consolidations and all that. And you want to see the close, because the line chart is often formed from the or lows. Unlike candlesticks that shows us the open high low close and swing lows and swing highs, you can't get that with the line chart. Okay, so the line chart is able to better show us um, a smoother how do you say this? Smoother movements in price, especially based on the close levels, which you can use to do your Elliott wave analysis, to draw proper positioning, to put positioning on your trend lines, to draw consolidations better based on the close levels, the real levels. And there are some patterns that the line charts are used for, maybe divergence, okay? Divergence for the RSI or MACD. So each one has got its uses depending on your strategy. But of course, the candlesticks chart is the most commonly and most widely used, and in fact, the most informative. The most informative. So I'm going to put that in green. Okay. Next, what's the next step? I'm going to show you all this. I'm going to show you all this on the chart. The next step is, let's go back to our list, identifying trends. So this is another beautiful thing here. This is why we have this training, right? I may have posted it to you on Telegram like this, but we could all approach it in different angles. For example, choosing the right chart type could be the first approach. The next step for looking for price rejections, for reversals. Some identifying um, uh, trends with very sharp gradients. It all depends on your strategy. For some others, it could be looking for support and resistance level. So for some others, point 3 would come before point 2. So let's just talk about point 2, identifying trends. For example, if bullish, bearish, or sideways. Next, support and resistance levels. Support and resistance levels. This one, I'm not going to talk about this again. You can find on YouTube. Find on YouTube live or the live section of our page. Okay. The topic, assessing support and resistance for consistent income. So if you don't know how to assess support and resistance levels by now, shame on you. If you don't know, we got you covered. Go to our live section of YouTube. There are about 3 to 4 ways of assessing support and resistance levels. 4 major ways, one of which has been divided into 2 subtypes. Find it on the live section of our YouTube. Watch the video. Some might think, oh, I know support and resistance. Trust me, 70% of traders don't know to properly assess support and resistance levels. I take that again. 70% of veteran traders do not know how to properly assess support and resistance levels. What we think do not include or belong to support and resistance actually is support and resistance. What we think does cover support and resistance perhaps might not be support and resistance. So go in there, assessing for support and assess assessing for support and resistance levels video on the live section of our YouTube page. Watch it, get better at it, have the knowledge, and then improve your trading journey. Now, what's the next step? This is a practical session, so I'm not going to focus too much on theory here. Use technical indicators. Now, look, there are different strategies. Okay. In fact, today, there's something called price action that is very popular in the market. There's something called price action that is very popular in the market, where many traders are becoming quite conversant with the markets without the use of indicators. So this guy, not compulsory, depends on one's strategy. Okay, you could use indicators, you may not. You could do simple price action that is quite common today, and do that. Wait for specific patterns to pop up in the market and take advantage of that. Many traders do that these days. Quite effective, quite consistent. All right, so it's not compulsory. Now, recognize chart patterns. This, in my opinion, is the most important point, because regardless of what you do in the market, if you're a technical trader, okay, you need chart patterns to some point, to a great extent, in fact. No matter what you do on your charts, analyzing the charts, okay, has to do with 70% has to do with, or perhaps 60%, what patterns you see. So we're going to put this guy in red. Recognize the chart patterns, depending on which one, depending on what exists in your strategy. Each trade, analyze for volumes. See, notice I'm putting analyze for volumes after chart patterns. Okay, because you don't look for volumes. You don't look for volumes before you see your chart patterns. You tend to spot your chart patterns before you eventually wait for volumes to occur in the market, or look out for volumes. And what are volumes? Again, find the topic, volume analysis in price action. Okay. Find the topic. We're not going to talk about that today. It's going to waste our time. Volume analysis in price action in the live section of our YouTube channel. But what are volumes? Volumes, when you have the presence of volumes in the market, it tends to tell you when you have a large number of buyers in the market and a large number of sellers. So why is this important? There's something called sniper trading, sniper entry, which many traders are becoming quite conversant with these days. Meaning, choose your entry at the right time. The two biggest problems of traders usually are when to enter and when to exit. Analyzing the chart is something that's quite familiar, okay, with many traders. You pick 10 traders, 5 to 6 to get the analysis correctly, but maybe 1 to 2 could perhaps be consistent with making profits, all right, knowing when to enter and when to exit. Volumes help solve this problem. Volumes increase your chances of capturing your profits based on your strategy or the chart patterns you see. For example, you predict that price is going to go strongly bearish, right? Meaning that you want to enter the market when there are a large number of sellers in the market that's going to push price to the direction you predict it is going to go, to the target level. So what do? You wait for volumes for the bearish side, telling you that there are large sellers in the market. Again, we're not going to talk about this too much. There are several ways to assess for volumes. One, based on the size of the candle, based on the pattern of the candle, using indicators. Okay. And then perhaps waiting for news, major news occurrences in the market. You know that there's going to be strong volumes in the market at this time. But the first three for me are the best. Trading the news is always quite risky depending on your strategy, and it could go volatile in two directions depending on what is being released. So it's not a reliable way to assess or wait for volumes in the markets unless, of course, you're a fundamentals trader and it's part of your strategy. Now, the next step, and I think is the second most vital step in this lecture today. The next step is this. We go back to our side hustle there. Consider multiple time frames. This, for me, I think, is the second most important point. And we're going to talk about this today. Consider multiple time frames. Now, the application of time frames forms a huge, huge impact on the success or consistency of a trader. Okay, how does this apply? So let's talk about this in a separate side lecture, which I think is very important. So the application of time frames. The application of time frames. Good. Now, before we go into this point, I need you to remember, based on what we've been teaching so far, the three different types of trading strategies, the three major types. Whatever strategy you're practicing, okay, in the market is often divided into three major styles of trading. So let's recap on that to understand time frames. Number one, swing trading. Number two, day trading. And number three, which in my opinion still comes under scalping, but it's relative to it's to one strategy anyway. But today it's become quite I'll say highly practiced in the market. So we're going to give it its own style. Okay, put it as a major style, scalping. Scalping. So, what is swing trading? Swing trading is when you place a position and leave it for more than 24 hours before you capture or close it, rather. Okay, that's swing trading. In fact, a different subtype of swing trading is something called position trading, especially pertaining to the stocks traders. Many stock traders do what is called position trading, especially um, those in the first world countries. Okay, never forget this. Position trading, also a part of swing trading. Now, the next style is day trading, where you open a position and close it before the end of the day. And finally, scalping. Scalping is get out quickly in less than 1 to 2 hours for short targets. It's a concept of a grain of rice doesn't fill a sack, but it helps. So by the time you stack up 1 grain, 2 grain, 3 grains, 4 grains, 5 grains, 1,000 grains, 1,000,000 grains, blah, 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 and so on and so forth, you have a sack of rice. And then you look at it at the end of the month and say, whoa, did I do this? Did I just accomplish this scalping? For many traders, it has become the most profitable way of trading. for many. It has become the most profitable style of trading for many traders. So where the day trader is looking at target A to B, the scalper has captured targets A, B, C, D, E, F, G between A to B of the day trader. So those are the three major styles of trading. Hence, in applying your time frames, it's important to know where you fall. What kind of a trader are you? What style of trading do you practice? What strategy do you practice? So let's go further. Okay. Now, as a foundation, again, ask your questions. Don't be shy. I'm here for you. Anything you like. Foundation, you must understand that higher time frames tend to predict market movements over a long period of time. That is, in the far future. While lower time frames tend to predict market movements over a short period of time. That is, in the near future. Hence, what does this mean? What does this mean? This is very important that many traders come to discover much later in their trading journey, maybe after a year or 2 years, because they were not properly taught or perhaps had the wrong information. Now, for example, if the 5 minutes chart, if the 5 and 15 minutes chart, let's say 5 minutes chart alone, bearish movement, if the 5 and 15 minutes chart predicts bearish movement in the next 2 to 3 hours, or say 2 to 5 hours, and the 4 hour chart, or say the 1 and 4 hour chart, here predicts bullish movement in the next 24 to 72 hours. It usually means in the near term, we don't know when exactly, price will most likely go bearish before it eventually goes bullish, okay, in the longer term. In layman terms, price will experience a brief fall before a rise. That's it. The application of time frames. So that's what usually happens. Now, let's look at this. Another example. If the 1 hour chart predicts bullish movement in the next 24 to 72 hours, we don't know when exactly, and the 4 hour chart predicts, say, the 4 hour and daily chart bearish movement, okay, in the next 1 week upwards, okay, it means price will most likely go bullish in the next 24 to 72 hours before it eventually goes bearish. In layman terms, what does this mean? It means price will rise in the next 1 to 3 days, but will eventually drop in the coming weeks. Simply put, there you go. We're back. So we had a brief connection issue before. Apologies for that. We had bad connection issues before now, so sorry about this. Now, other main points I want us to establish is this. Another fact. Usually, the higher time frames, such as the daily chart, determines the general trend of the market. I like to use the daily chart to assess for the general trend. So what else? Other uses of the daily chart before you start to trade. So let's give this a separate title: steps to take before trading the market. Steps to take for analysis before trading the markets. Number one, find the general trend. Okay, depending on find the general trend depending on your strategy. Okay, whatever you do, why is this important? Why is this important? It's ultimately, I'm going to put that in caps lock. It's ultimately better to trade. Maybe some of you must have heard this saying. You've heard me say it many times. Ultimately better to trade within the trend. What does this mean? Again, what does this mean? Look, It's ultimately better to trade within the trend. Why? For example, if the trend is bullish, it's ultimately better to look for bullish positions in line with a possible bullish trend. Okay? Depending on what type of a trader you are, regardless. So if you've assessed that the general trend is bullish, why look for bearish positions? It's safer to place bullish positions in line with the trend. Because you know that, why is this important? Again, also because no matter how far price sways from your original position, it's, say, at least 90% of the time, let's put that, returns to the direction of the general trend. Okay? Second example, say you placed a day, a sell position, day trading, sell position. All right. For example, you placed a day trading sell position for price to fall to 1.122423 on Euro USD. But price moved in reverse direction. Okay. By rising to 1.12, say even 70. That's about, say, 73. That's about 50 pips upwards already. 50 pips in the opposite direction. Right? Now, if the general trend for the next coming couple of days or weeks, okay, is bearish, that is sell, price 90% of the time will return. Might take some time, might be immediate, okay, might be so much later in the future. Price usually returns. One moment, please. Let's check the quality of the internet. Tend to predict market movements over a long period of time. All right, everything looks good so far. Now, as I said, 90% of the time, price will return, okay, to your original position. Say maybe you place the sell position at 1.1 1.1243. Yeah. For price to fall to 1.1223. So price goes maybe 30 pips, heads to 1.1303. That's about 60 pips. Let's correct that. In the opposite direction, 90% of the time, if you were in the general trend, price will often return to your original position of 1.1243. Okay. Safe enough and in time for you to close your trade or leave it to reel in profits. You want to look for the general trend. You want to be safe. Another reason is this. Another reason for trading within the trend. Okay. Price, or rather, take profit levels are captured faster. In other words, you make money, you capture profits faster and more efficiently when within the trend. So I can't emphasize this enough. Let's just put that um, in bolding letters there. Whatever you do, okay, whatever you do, trade within the trend. Ladies and gentlemen, whatever you do, okay? So let's put that among our main facts. Let's put that among our main facts here. Don't forget, always trade within the trend. Unless you are something called contrarian trader. We're not going to talk about contrarian trading today, maybe some other time. Unless you are a contrarian trader. That's another kind of strategy in the market. Always trade within the trend, unless you are a contrarian trader. All right, ladies and gentlemen. I'm glad we've established this basic foundation. And I'm glad that today we have covered this ground because this is going to serve as topics to come in the near future. So pay attention to this. Don't go nowhere. Practice this in your trading. Now, there's something else you should note. Our first step was find the general trend. Next, that's also part of our steps here. Look, identify the trend in number 2. The right chart type, identify your trend. Next, look for support and resistance levels. How do I do that? Look for common support and resistance levels using higher time frames. So look for general or significant support or resistance levels. Okay, using higher or lower time frames. It all depends on your strategy. It all depends on your strategy. So, chart patterns, when you identify them, it also depends on your strategy. For example, and we're rounding up now. Let's go into the next step. The next step. Now, as a day trader, let's start with scalping. As a scalper, okay, for example, a scalping trader is often concerned about support or resistance levels, stroke, visible on the 1 minute, 5 minutes, and 15 minutes chart. Okay, but even at that, while still trading within the general trend. All right, you must understand this. So, first and foremost, find the general trend. What's the trend for the chart? Look for support and resistance levels. Usually using higher time frames depending on your strategy, but I recommend map out the main support and resistance levels. I recommend you map out the main support and resistance levels depending on what your strategy is, using higher time frames. Regardless of your strategy, rather. What do I mean? I'm going to show you on the chart. So let's put this in red. Okay. And let's get our perspective clear. One, get the trend. After making out, on deciding the chart type you want to use, identify your trend. Okay. What's the general trend on this asset? Next, main support and resistance levels. It doesn't matter what your strategy is. Scalping, day trading, swing trading. Go to the daily chart. Go to the weekly chart. Go to the 4-hour chart. Get the main support or resistance levels. What kind of a trader you are, be it a day trader or swing trader or scalper, you can look for patterns on higher or lower time frames. As a scalper, I'm looking for patterns on the 1 minutes or 5 minutes chart. So let's remove this right here. Let's talk about chart patterns here alone. Okay. For example, a scalper is often concerned with chart patterns visible on 1, 15 minutes, and 5 minutes charts, depending on the strategy of the scalping. 1 minute is usually for extreme scalping. I don't recommend you do this unless you have some very good trading knowledge. 5 minutes, Okay. You're looking at moderate to normal scalping, and 15 minutes normal scalping. So this is it for a scalper. For a day trader. For a day trader. Oh, we've covered some ground. We've done 1 hour, 22 minutes so far. One moment, please. Okay. You can ask your questions. We're taking a pause. Anything pertaining to the markets, go ahead. Now, let's see. Yes. The next step, ladies and gentlemen, for a day trader, we'll finish for scalping. For example, okay, as a day trader, what do we do? A day trader is often concerned about chart patterns visible on the 15 minutes, 30 minutes, and 1 hour charts, depending on the strategy. Depending on one strategy. Now, if you focus only on 15 minutes charts, you're looking at quick day trading. Okay. Almost similar to scalping, but not scalping. So the concept of this is quick opportunities, get in, get out, usually within the next 12 hours, the next 6 to 12 hours. For the 30 minutes to 1 hour, and 1 hour charts. Okay. This is normal day trading that presents opportunities. Look, within the next 12 hours, or say 24 hours to 72 hours. Sadly, the 1 hour chart often gives opportunities that lag on into swing positions. Okay, many times. This is the case. So this is it. Now, as a swing trader, okay, a swing trader is often concerned about chart patterns visible on the 4 hour chart. Okay, visible on the 4 hour, daily, and weekly charts. All right, this is it. Um, many times, many swing traders, I'll say short-term swing traders, often use the 30 minutes and 1 hour charts for entry, while medium-term swing traders often use the 4 hour chart for entry. And then the long term, very long term swing traders often use the daily chart for entry, especially position traders. All right. So this is it for chart analysis. Entry for day trading depends on your strategy. Okay. Um, entry for scalping also depends on the strategy, whether it's extreme scalping, moderate scalping, or the normal one. All right. For extreme scalping, they tend to use the 1 minute chart for entry. So let me put that there for you. Normal to moderate scalping, also used for entry. Um, used in, in conjunction with 15 minutes chart. However, the same thing. Here you have, okay, in most cases. Now, for the day trader, also depends on the strategy. You're trading 30 minutes and 1 minute, 1 hour chart. You're looking for positions within the next 24 to 72 hours. Many times, you have the 15 minutes chart, 5 and 15 minutes charts are often used for entry. And here, for the 15 minutes chart trader, again, it's similar to scalping. So, the 5 minutes chart is also often used for entry in this case. All right. So I hope I've answered this well enough. And by now, you already have an idea as to what chart analysis should be. Let's start afresh and have a summary of everything we've done so far before we round up. Number one, choose the right chart type. That's the candlesticks, bar chart, or line chart. Two, identify the trend, bullish, bearish, or sideways. In this case, the general trend. Why? Because you want to trade within the trend. It's better to place positions within the trend unless you are a contrarian trader. Next, assess for support or resistance levels. No matter what kind of a trader you are, it's always best to know the main reaction points in the market. Using the higher time frames, 4 hour chart, daily chart, and the weekly chart. Now, the use of indicators today, because of the application of price action, it's not compulsory. It's not usually used by many traders today. But I use indicators a lot, and I give strategies on indicators. You can use that and see that on the YouTube section, the live section on YouTube, our trainings, and on Facebook. Today, there's a growing number of traders, maybe about 5 to 10% of the trading population, that do not believe in the use of indicators. I do not belong to that class. All right. No man is an island. There are many strategies out there. That doesn't mean that such a strategy is not effective. It's also quite effective. All right. Depends on what works for you. One man's food is another man's poison. Now, recognize your chart patterns. Also depends on your strategy. Okay, be it whether you're a scalper, a day trader, or a swing trader. And for me, I think is the most important point in the analysis of your chart. Next, once you've seen your chart patterns, know when to enter. Okay, you're waiting for volumes. Where do we have the large number of sellers or buyers in the market? Wait. And also, do not forget the second most important point. Let's put that there. Apply the multiple time frames. That's the second most important point. Regardless of what kind of a trader you are, applying the time frames sort of makes you a god. You know, I have students who will ask me, especially beginner traders, how did you know price will fall before it drops? No, you have to tell me, how did you know price will fall before it starts to drop? Did you know price will rise before it starts to drop? Making you look like a very how do I put it? A soothsayer, someone who sees visions. So, as a trader, especially if you want to predict market movements, you cannot do without applying the time frames. No matter what kind of a trader you are, because 1 minute price could seem bullish on 5 minutes and it switches direction to bearish, and you're wondering what the hell, what happened? You were not in the general trend. You were not trading within the trend. That's exactly what happened. And the final point that sums up everything together is something you should remember. Always trade within the trend unless you are a contrarian trader. Ladies and gentlemen, that's that for theory this evening. Now let's go into the charts and give you live examples. Look, let's start with um, the AUDUSD. I gave the outlook on this guy. All right. Let's try to open up a new chart. So the first step, I'm using candlesticks here. This is candlesticks chart. Look. On the weekly chart, I'm starting with a higher time frame. I've assessed, I have known my chart type. I want to use my candlesticks chart next. What's the general trend? And then I'm going to try to solve two problems with one go. Identifying the general trend and also perhaps mapping out main support and resistance levels. So the weekly chart, I'm going to start with that, or maybe the monthly chart. We have a major support level here. I'm going to give support levels thick, the pink lines, or magenta. We have another major support level right here. Now, relative to where price is at this moment in time, we have this one right here, this significant swing low. Finally, we have another significant swing low right here. And then this guy right here. Map out your main support and resistance levels. Okay. Now, for the swing highs, there's no major swing high apart from this one. So we're going to give that closest to price right now. We'll give that the blue color. Watch me go, ladies and gentlemen. Watch me go. Now, I'm going to open another chart. My key levels for me are, sometimes you might want to use the line chart to know the close regions. Look, if I switch to line chart, you see them here and here coinciding. You see that? Here and here also coinciding. So if you put that there on the wave, and put this one right here. No, support is with pink lines. Okay, intersecting common support and resistance point. If you switch back to candlesticks, this is what you have. Okay, now if you go with candlesticks, you want to map out the swing lows and swing highs as support or resistance. The line chart gives you the close levels, the close using the waves. The candlesticks gives you the significant swing highs or swing lows. If you don't know what that is, come to our beginner training in Vestrado. You see, significant swing low here, significant swing low here. All right. We have another significant swing low right here. So you might be asking the question, they are too close to each other. Hello. This is the monthly chart. This is the monthly chart. Okay. Just a small movement in price could be 500 pips. My brother or sister listening to me. Close or not, this is the monthly chart. You want to pay attention to all levels, even if they are close to each other. Now, let's go to our new chart. In there, we'll start with the weekly and the daily chart. Look at where price is right now. Are there any significant swing highs or swing lows? Let's start with the swing low. This guy, 1, 2. Okay, seems to be an order block level. 1, 2, 3, 4. If you switch to line chart, you can see that 1. Now, closest to price, 1, 2. Two significant swing lows, support or resistance levels. In this case, support. All right. The next, closest to price. This guy right here, significant swing low. You see? So map out your support or resistance levels. Now, that's for weekly. Now let's switch to daily. What do we see on the daily chart? Any major support or resistance level? Nothing peculiar, nothing to note. I'm applying my indicator right now. Is there anything to note? Yes. I love the RSI. My strategy is centered around oversold, overbought, oversold levels and divergence. If you want to know what the strategy is, go back to our last video on setting your stop loss. I gave a strategy there. The indicators really work on Facebook. The use of Fibonacci. All right. The last topic we had, the RSI and its applications on the YouTube live section. You find the strategy. Look, if you connect the RSI, price going down, and you connect the same waves on the RSI on the daily chart, we see what? Negative divergence. You can see what we're seeing. We're moving from the highest time frame to the lowest. You see that? We can see negative divergence on the daily chart already. And if you train your eyes well, if you train your eyes very well, look, you could even spot something similar to a channel. But to appreciate that, let's open a new chart. So you see, in my analysis, I tend to open 4 to 5 charts, or maybe 6 charts or 3 charts, depending on what I see in the market. Sometimes 1 or 2 are enough, especially for Bitcoin when I trade Bitcoin. Why? Because my strategy on Bitcoin is usually scalping and intraday trading. So if we go to day trading, the daily chart, we can try to spot price moving nicely within a channel. You can see you're spotting patterns on the daily chart already. If you're a swing trader, this is useful for you. Remember what I said. For the swing trader, patterns and trading with those patterns on daily chart usually comes in handy. All right. So for a day trader or a swing trader, this guides your trading. All right. It's not a major yardstick. It doesn't form a major standard or foundation for you to enter the market because it's a daily chart. All right. Entries on this guy lag on for days and weeks. Now, what else do we see on the daily chart? I'm spotting patterns. No matter what I do, I see something similar to a fair value gap right around here that wants to cover to this significant swing low. Or maybe here, this swing low right here. So let's tag that. Fair value gap. FVG. We'll have a lecture on fair value gaps three weeks from now. You better join in. So we're done with that. Now I'm going to open another time frame. This is Vestrado's platform, the MetaTrader 4 or MetaTrader 5. You have the ability to open as many time frames and do your analysis. So I see many people say, I use TradingView, I use this, I use that. There's no platform as sweet as MetaTrader. Let me just tell you that. Okay. First off, TradingView, to use indicators the way I'm using, you have to pay. You have to pay money to use simple tools and indicators on TradingView. TradingView is good, okay, in the way it is useful for its uses to map out perhaps non-transparent brokers and many other uses because it's quite catchy. The chart is catchy, very beautiful to look at, right? And many tools to use, but you have to pay. And some say that I hear traders say you can't match what you have on TradingView. The truth is, keep it simple. The simpler, the better. No, when you become consistent with trading and you understand your charts, it won't matter what platform you use. I repeat, when you become consistent, you understand your charts, you're grounded with your chart, it really will not matter what platform you use. MetaTrader 4, MetaTrader 5, WebTrader, TradingView, so long as you have the simple basics. What are the basics? Trend lines, horizontal lines, vertical lines, RSI, stochastic, MACD, all right? Or maybe the RSI, Bollinger Bands, moving averages, the basics. That's the side. That's on the side. Now let's go further. Let's open a new chart. 4-hour chart and see what's present on this guy. What opportunities are bound? What opportunities do we have? Now, if you recall, on the daily chart, we were able to see that there was some sort of channel, price moving within a range. Okay? It's not easy to spot unless you've got some level of experience in the market. Okay? Now let's check the internet quality. One moment, please. One moment, please. Good. So far, it looks like the internet quality is good. And you can see or hear me nicely. I like to do that to be sure that you have the best here at Vestrado. So ask your questions. Don't forget, we are here for you. Ask your questions. Let's check if everything's good. Everything seems good so far. All right, we're rounding up. We're rounding up now. So, as I said, we had a channel on the daily chart compressed. Now, look at the 4-hour chart. Look at the 4-hour chart. The compressed channel is expanded. You can see it better. You see that? The compressed channel is expanded. Beautiful. So you have your resistance level here, your support level here. Right now, by expanding the channel and looking at the 4-hour chart, price, the market, the charts have guided me to understand that price is currently at the resistance border of the channel and is experienced what? Price rejection. Price rejection. Just by looking at the charts. No matter what you do, scalping or day trading, you want to know this. Okay? Price rejection at the resistance border of the channel. Ladies and gentlemen, you see that? So the next step in our analysis, remember we said we've used indicators, the RSI, we've assessed for support and resistance levels, we recognize chart patterns, and now we want to analyze for volumes. What are volumes? Go to the live section. I'm not going to teach you that today. In applying multiple time frames, let's look at applying multiple time frames. First off, what is the trend for this guy? What is the trend? Bullish. The trend for this guy has been strongly bullish, nicely going in an ascending channel. Okay, look at this strong, sharp, bullish trend right here with a sharp gradient, a very sharp gradient. I've assessed that using the higher time frame, daily chart, bullish trend. So what do? I prefer to look for bullish positions. On the 4-hour chart, it's on the resistance border of the channel. In other words, if I'm going against the trend, it's also safe to trade within this channel, opportunities within the channel. But in the general sense of things, bullish positions are safer. I hope this is clear. Next, multiple time frames. We've used weekly, we've used daily, we've used 4-hour chart. Okay, now let's go to the 1-hour chart. Now, these pertain to swing traders. On the 1-hour chart, what do we see? On the 1-hour chart, what do we see? Nothing peculiar to note. And again, you don't force yourself. If you don't see anything pertaining to your strategy, don't force it. The only thing I see here is price rejection at the resistance border of the channel. So what's it telling me? Price looks like it's preparing for reversal, going down. On the 30 minutes chart, look, thing is becoming visible here. We see price moving nicely along a trend line. Very nice. In other words, it's setting the stage nicely for what? A brief bullish run. Look, how do I know? Now let's go to the 15 minutes chart. If you connect the lows, you see that this is called a falling wedge. I'm already popping up. Look, multiple time frames. Falling wedge. So what does this mean? Falling wedge in a downtrend means that price is preparing for a bullish run, a brief bullish run. So what does this tell me? Daily chart has told me the general trend is bullish, but there's the presence of what? A fair value gap, creating the possibility of a bearish drop at the break of this support border of the channel. If price breaks the support border, to understand channels, we'll have a different topic on that. There's a good chance it will cover the fair value gap on a bearish drop. So I'm open to trading within the channel or the break of the channel. On the same daily chart, negative divergence also telling us that there's a good possibility for price to do what? Go bearish. Hence, agreeing with what we saw on the other chart, same daily chart for the fair value gap. So you should be open to bullish positions because price is strongly bullish following the steep bullish trend. But the patterns right now are telling us that there's a good chance we could experience a bearish move. I hope it's making sense. And then the same AUD USD. After mapping out the levels, it's good to know those levels. Okay, on the 4-hour chart, we've seen an ascending channel, price at price rejection, form price rejection on that channel, indicating that it's preparing for a bearish drop. So look, 4-hour charts, price rejection telling us there's going to be a bearish drop. 1 hour and 30 minutes chart form the falling wedge in a downtrend, telling us there might be a bullish run. So what's my analysis for day trading? Based on 30 minutes to 1 hour chart, in the near term, there will be a bullish run. Based on the 4-hour chart and daily chart, we could experience what? A bearish drop after the bullish run. I hope it's making sense. The market is beautiful, it's sweet. When you know your charts, you think your charts, you eat your charts, you drink your charts, trading becomes easy as ABC. Now, we're rounding up. On the 15 minutes chart, we also see a falling wedge, practicable for day trading. On the 5 minutes chart, what do we see? We see price break away from this continuation pattern right here. I'm not going to talk about that right now, but it looks as though the bullish run, the bullish pressure is picking up because the bearish continuation did not complete. So 5 minutes, 1 minute, what is it telling me? Meanwhile, the 1 minute chart has broken above the falling wedge. Signal to start buying. And what did it do? It broke above key resistance level 1, 2, 3, right here. Right here. 1, 2, 3. So what's my conclusion? For scalping, 1 minute, 5 minutes, I've just told me buy the AUD USD based on the following wedge. Buy now, buy now, buy now, buy now. Can't sing it well enough. Buy AUD USD. Trade opportunity, signal, going into tomorrow, going into the Asian session. Ladies and gentlemen, beautiful trading today. As beautiful as it is, we just got a signal. Now, 15 minutes chart. In the next couple of hours, 2 to 4 hours, we could experience a rise. Rise to where? I buy above the falling wedge. My next target level would be this significant swing high right here. 6513. Okay. If it goes above that, then I'm looking at 6517 on scalping and intraday. If you want to apply the Fibonacci, you want to go to the 50% Fibonacci mark, you can go as high as 6519 or 6520. Trading is beautiful. All right, ladies and gentlemen, I hope this was educative enough for you. I hope you learned something. Again, you're welcome to join us. You're welcome to join us on our Facebook live session next week. We're going to have a very interesting topic for you. the most, analyzing the US Open. Very important. We're going to be looking at some very good trade opportunities for 1 hour straight. What to trade? Join us. YouTube live section again. Tomorrow we have training. Sorry, next week, Friday, we have training. So our Muslim brothers and sisters again back at the Salah. I wish you a very beautiful Eid al-Kabir. Have a great weekend. All right. Me, I'm going to enjoy myself. Oh. I wish you a beautiful trading day today, tomorrow. Remember, whatever you do in the markets, don't be overconfident. No one strategy is king. No man is an island. All right. The trend is your friend. Wait, trade within the trend. And above all, don't be greedy. Have a good one. I'll see you again next week. I'm Atomashi Dania, Vestrado's Global Market Analyst. Bye bye.